All right, accounting. As a cause of action for an accounting arising where there is a fiduciary relationship, such as where one party has a dispute with a guardian, trustee, receiver, or other fiduciary who has control over assets of a party complaining. Accountings may also be ordered where the issues in a contract case, for example, are so complicated that it is not clear if the facts can be ascertained any other way, and always where the underlying contract has provided for an accounting in the event of a dispute, when the complaining party has no separate access to the records, such as where a fiduciary like a trustee or a guardian has the books, an accounting will almost never be denied, since the complaining party may have no other way to ascertain if the fiduciary has carried out his duties faithfully. Elements. To successfully plead for an accounting, one should assert the following. 1. The existence of a fiduciary relationship or contract demands that are so extensive and complicated that it is not clear that money damages alone are adequate. And 2, necessity for the accounting. The remedy sought is one in equity. Therefore, the court has broad discretion in whether or not it will grant the relief sought. It is important, therefore, to allege sufficient facts to make clear that justice and fairness demand that an accounting be given. Defense. In the matter into which the other party seeks an accounting is one that is simple on its face. Ergo, an oral agreement for performance of a clear-cut duty that involves no fiduciary entrustment of assets, then this should be raised as a defense by way of a motion to strike or dismiss. Comments. The remedy of an accounting is almost always performed by a judge or a special master appointed by the judge. Accountings are almost never submitted to a jury because it is usually impractical for a jury to undertake the process. Basically, they're not bean counters. They're not licensed by the licensor as a licensee as a bean counter, all right? Winding up of partnerships almost always involves necessity for accounting to determine respective parties' interests. This also applies to closely held corporations in which the business has come to a standstill because of a deadlock between directors. Accounts stated. This cause of action arises where parties have engaged in prior course of dealings with each other, i.e. a history of trade and transactions between them. A debtor refuses to deny the amount claimed by creditor's invoice or other billing notices or demands. If the debtor does anything to acknowledge the account stated in the invoice but refuses to pay, creditor can bring this cause of action to collect the debt. The longer the course of dealing and clearer the debtor's acknowledgement, the easier it is to win. This cause of action is frequently abused by people unfamiliar with its elements. Many mistakenly believe they can invoice someone for a debt, saying in the invoice, if we do not hear from you within 10 days, or words to that effect, we will assume you acknowledge the debt. This may work against naive or poorly represented defendants. However, it will not work where the essential elements of the cause of action do not exist. Elements. To successfully plead a case for account stated, one should assert the following. 1. The parties engaged in prior dealings out of which the accounts arose. Mere statements of a liquidated amount due on a contract for fixed price alone that the defendant is clearly obligated to pay does not give rise to an action for account stated. 2. At the time the account was presented, the debtor had a prior liability to pay. There can be no action for account stated if, when the account was presented, the debtor had no liability to pay. 3. The defendant either expressly or implicitly promised to pay the balance of the account stated. An express promise is easy to prove. An implied promise, however, cannot be established by the defendant's mere failure to dispute the debt. There must be more, such as a well-established practice of periodic billing in the regular course of dealing to which no objection is made within a reasonable time. Defense. The most common way to defeat an action for account stated is is to show that the debt claimed is new, i.e., that there was no prior course of dealing between the parties. If there was prior dealing and a long history of periodic billing that the defendant timely and routinely paid over an extended course of time prior to the invoice in question, the defendant is put to the difficult task of proving, 1, he did not assent to the amount of the debt stated in the invoice or demand, and 2, that he had no obligation to do so, and 3, that he never received the goods or services for which the invoice applies, or 4, he paid the debt. Comments. Sending an invoice or other demand for payment of a debt that includes language such as failure to dispute the amount of this said debt will result in the creditor's assumption that the debt is owed may intimidate some people into paying. A lawsuit on this cause of action may actually result in a judgment if the defendant is unfamiliar with the law. A savvy litigator familiar with jurisdictionary teachings will not be taken in. However, failure to respond to a demand letter without more is sufficient to give rise to this cause of action. Suing for accounts stated when essential elements are clearly absent may expose the party bringing the action to a counterclaim for abuse of process. Barratray. All right. Extortion, the Hobbs Act. When we come back, we'll be talking about assault, what assault is. A lot of people misuse the word assault. They say, I was assaulted by a cop. They may have been assaulted by a cop, and in most instances, it's a battery or an aggravated battery. So when we come back, we're going to be talking about assault and what the elements are that you need in order to bring forward a claim or a suit for assault, okay?